Hello everyone, it's Henry on the live stream. I appreciate you all for tuning in. I hope everyone can hear me and can see my screen very clearly. My apologies for tuning in a little bit late, 3 minutes late. It was due to some issues I had with the YouTube. For some reason it just signed me out, so I had to basically sign back in. So let's take a look at the charts, what the market is doing so far, and what we're anticipating to see. In this live stream, we're going to start by talking about Ethereum because we already have a trade idea all sent out to the members on Ethereum a few days ago. And I still talked about it in the previous live stream. And using the Fibonacci, this is our directional bias where we're anticipating for the market to gravitate to. And this is the new low because it mitigated the high, which was the last down close candles. After that mitigation, we wanted to see a 15-minute shift in market structure, and right here, as you can see very nicely, price broke structure. We created a high, a low, broke structure. This last down close candles is my point of interest where I want to see the market gravitate to for a potential entry into the marketplace. So we had our first entry right here, buy limit order. As you can see, price mitigated that position. So our first buy limit order, we're already in the trade. You can see it right there. So if I move this right there, you can see. So price mitigated our entry and expanded to the upside. So first entry done. Now for the second entry, all we want to see is a potential 5 minutes or 3 minute shift to market structure. You can see it on my chart. And right here, you can see so far we'll go to 5 minutes time frame. After price mitigated that position, we created a high, created a low, broke structure very nicely. We'll go to 3 minutes time frame as well. High, low, break structure very nicely. What do? We'll place our entry position at the highs. Like I said previously, in as much as I still anticipate for price to come down here, maybe most likely even mitigates this extreme discount zone, at least for the last time, if we're going to continue higher. In as much as I'm anticipating for price to mitigate that position, I'm not going to use that as my entry. I'll use the high. The reason is because 7 times out of 10 times after a break of structure, if we're going to continue higher, price usually comes to the high. It mitigates the high 7 times out of 10 times. We're working with probability. We don't know what the market is going to do, so we're working with probability. There's no 100% certainty that any trade is going to work in your favor. All you're doing is taking advantage of what the market is doing and following your own analysis, your own trading model. I'm sorry for the people who are not able to see. My apologies once again for this live session, and I forgot to update it on the website. So a lot of people that were watching, that usually tune into this through the website, they wouldn't have been able to see what I was showing them, except people who just sign up, who just log in through YouTube directly. But I've just had that updated. So if you refresh, if you go on now and refresh, perfect. Thank you so much for your confirmation. So I'm going to relay everything I talked about previously for people who are just joining us now. And so what I was looking forward to see on Ethereum, number one is I wanted to see a break of structure on 4-hour time frame. And as you can see, this is a daily high, daily low, and price broke that structure. The next thing I want to see is this key level. This is the last down close candle that took liquidity before expanding to break that structure. So I want to see price revisit this key level right here, this last down close candle. And when the market visits that position, I want to see a 30 minutes or a 15-minute shift in market structure to the upside. Now, if we go down to 15 minutes time frame, you can see very clearly on 15 minutes time frame, we created a high, created a low, and then this low right here mitigated that red line. You can see that very clearly. You can see the red line The red line is the high, this high right here. And you can see how nicely price mitigated that red line. All I wanted to see after that mitigation is a 15 minutes break of structure to the upside. And right here, you can see very nicely a high, a low, we broke structure. The moment we broke this structure, this last down close candle becomes my point of interest. Now, if we use our Fibonacci from this low resistance liquidity high, this high right here is my directional bias where I want to see the market gravitate to. Now, if we use the Fibonacci from this low to this high, this key level is our extreme discount. Now, the extreme discount zone, look what's resting right there in the extreme discount zone. Inefficiency. We scale to 1 hour time frame, what's resting right there? Inefficiency. Last down close candle. You can see how this is aligning from break of structure from the daily to the 4 hour time frame, break of structure on the 30 minutes time frame, 15 minutes time frame. Now we want to see price revisit the extreme discount zone within the range high and range low. Range high where we're going to, range low, the newly created low being this one. Now, extreme discount zone, inefficiency resting at the extreme discount zone on 1 hour, inefficiency resting at the extreme discount zone on the 4 hour time frame and also on the 1 hour time frame. Now, another confluence, the last down close candle before an impulsive move to the upside that broke structure. 5 confluences. The moment price mitigate that position, what do we want to see? We want to see a 5 minutes or a 3-minute shift of market structure to the upside. We'll go to 5 minutes time frame. And as you can see, we created a high, created a low, broke structure. What do we want to do? Our entry position is going to be right here. Now, I wouldn't be surprised if price comes deeper to mitigate this line, which is the extreme discount for the last time. Number one, because it's the extreme discount zone. Number two, because there's an inefficiency resting right there. And number three, to scare people who got in or who are already into closing their position. Now, there's no certainty that price is going to do what you want it to do. There's no certainty that your trade is going to work. But the only thing we're working with is probability. Like I said, after a break of structure, if price is going to continue towards that trend after breaking structure, 7 times out of 10 times, it usually comes back to mitigate the high. So rather than us trying to be very precise in putting our entry right here or here, it's best to put an entry right here. This is where the entry is, and I actually even added a few extra pips, so the entry is around here. And the reason I did that is due to spread. And when you're trading crypto, you need to always pay attention to the spread. The spread is literally nothing you've ever witnessed when you compare it to Forex. The spread on crypto is literally crazy. So the best thing to do is give it room to do its thing. For example, if your entry was right here for the first entry, this trade wouldn't have activated you. But because I put the entry here and I added a few extra pips right here, that's why it activated us. The same thing goes with this one as well. We want to see price mitigate the high. And despite the fact that we want to see price mitigate the high, and overall, my extreme level where I'm anticipating for this to come to is right here. But there isn't a certainty that's going to happen. So what do? We add an extra few pips. So our entry is right here. So eventually when price mitigates this position, it's not going to activate us until price is around here. It's only when price is around here that the trade is going to activate us, despite the fact that our entry is right here. So that means even if price comes this deep, it's even more perfect. That means it's going to fill our entry and we'll be in that trade. So that being said, this is what I'm watching, and price actually expanded very, very much. And I was anticipating that maybe it's not going to come back, but like I said, you can never tell what the market is going to do. The market is going to do what it wants to do. All we're doing is follow our strategy, our concepts, and wait for price to do its thing and come to us. We don't chase it. We wait at certain positions for certain reasons. We need to have more than 2 confluences. I like to have like 3 to 5 confluences aligning before I'm looking for an entry or an area to take a trade. So if I'm looking to take a trade from a certain position, I need to see, number one, if I'm buying, is it at a discount? Is there an inefficiency? Is there a break of structure on the bigger time frame? Is there a break of structure again on the smaller time frame? And then is that a discount on the smaller time frame as well? You can see 5 confluences already that I've outlined. So I need to see at least 3 to 5 of this aligning perfectly for me to look for a certain entry to start to take a trade. Now, it doesn't mean for guarantee that the trade is always going to play out. It's always going to play out, but this helps to build the probability of the trades to play out nicely in my favor, so that when I'm taking 10 trades, all I need is 3 trades to be profitable, and my account is going to be profitable. Because on average, I'm looking for a 1:5 or more. So if I can hit 3 trades in profit, risking 1%, that's literally 15%. So even if I lost the remaining 7, 1% times 7 is 7%. I'm still up 8%. So that being said, we're going to be watching this as well to see what the price is going to come down here and tap us in. And if that happens, that means we'll be in 2 positions on the Ethereum, first entry, second entry. And our take profit remains the same. For this one, if it works out, is a 1:30. And the first entry as well, if it works out, that's a 1:14 risk to reward ratio. And as you can see on daily time frame, we still have liquidity resting right here, and price came down to run that liquidity. Let me expand this so you can see it very clearly. You can see the liquidity resting right here, and price targeted that liquidity, took that liquidity out, and look what's resting right here, extreme discount zone. So that is it from me on Ethereum. I'm really not gonna be taking on any other trade for the week. The week's almost finished anyway, so this is basically gonna be my only trade for this week. And I'll be watching it very closely. Hopefully this plays out, and we will hold the trade for quite some time, probably a few days or a week. But what we're gonna do, we're gonna manage the trade accordingly. When it's in profit, we trade stop loss to break even, and as it's going higher, we'll keep trailing our stop loss and secure some profits along the line, because trades like this could take some time. And with a lot of things fundamentally affecting Ethereum right now, with the lawsuit being dropped, and also with the ETF, Ethereum ETF, and also with the market structure on the 12-month time frame being bullish, top monthly being bullish as well. If we go to monthly, you can see that we've consistently been trending to the upside. So everything is aligning for Ethereum to hit an all-time high. So fundamentally, I want to see Ethereum hit all-time high. Now, technically, I'm looking for opportunities to buy it. So this is how we put the pieces of the puzzle together, from fundamental analysis to technical analysis, and we put them all together, and that forms a trade. And then we get into the trade in anticipation to make profit. So that is what I'm watching for Ethereum. Hopefully this trade activates us and it moves in profit, and we all can make some money. I appreciate you all for tuning in. My apologies once again for the delay. It was just due to some issues I had with the YouTube trying to sign in, and it just logged me out. So I had to basically sign back in and do all the setup again from beginning. So it took me quite some time to do that, but it's done now. And I appreciate every single one of you for tuning in today and the entire week. And I'll talk to you all next week. Have an amazing weekend, everyone.